Hey everyone, Matt Chart here. We're taking a look at the oil price and we're going to do a technical analysis on the price of oil. This chart goes back 3 years, so you can see that we've had a lot of volatility within this particular time frame. Going back into the 2008 era, we had recently hit a spike of around $150 a barrel. You can see we had a trend line that was pushing the oil price up. And once we broke the support trend, that signaled a reversal, and we saw the oil price basically plummet from $150 a barrel all the way down to 35.13. Now we had a higher low here. We had a bounce off the 35.13 and came down to 35 or 37.12. So this was the beginning here of a reversal, and you can see just after this higher low point was established, traders took the price all the way up to 73.90 quite quickly. From here we established a trend channel line. So we've got this red line here. We've got two high points that we connected together, and we took that down to our low points, and you can see that we connected it at least twice here. So this suggests that we've got a rising channel here. Now this is currently marked red, although I previously had this as a blue line because it was once support. So we've got a rising channel. I've called this channel A. So this is channel A. You can see that we're basically moving in this upward trend, and when we broke below the support of the channel, it signaled an end of this channel. But the old support line that we had then became resistance. So we continued in the upwards trend just at a lower channel. So we've got a second channel here as well we need to pay attention to. This is rising channel B that I've called. So we've got a secondary channel formation. Now both of these trends are positive, as you can see, and all of these lines are parallel. So currently this is our new support line, which I've marked as blue, and our old support line is now red, which is resistance. You can see we've confirmed this resistance numerous times here. We're currently testing this level here. Now, it's particularly interesting because of what's happening in the Middle East. There are potential supply restrictions going on with a lot of these countries that are in revolt are indeed oil producing nations. So these countries here, maybe we may start to see supply restrictions here coming up in the future, and hence why the oil price is now beginning to spike. However, with the recent few days that we've had of the oil price starting to run up, we still remain within this channel formation. So what we need to see for the price of oil to really start to take off is this resistance trend needs to be broken. Now if we can break this resistance, we should see the oil price start to trade within this within our channel A again that we previously were trading in. Now this has a current range of about $100 a barrel to about $130 a barrel and is trending upwards here. So in the near future we could start to see, if we can break above this resistance here and start to trade within our channel A formation, we've got our old high point here of around $150 a barrel. It's very likely within the following months we could potentially see oil back at our old highs of around $150 a barrel. But until we get there, in order to get there in the next few months, we do need to break above this resistance area. Now, if we do not break above this resistance, it does suggest that we are going to remain within channel B, and we could very shortly see a pullback in the oil price. We could come down to the mid $80 range. That I would probably feel as unlikely. With the new fundamental change in the oil price, we very likely are going to see this resistance line be broken. So keep an eye on that, and if you do stop by my board, I'll put a link at the bottom. I have over 150 oil charts that you can take a look at. They range from oil producing companies to just any sort of company that is connected or tied to the oil industry. You can take a look at those, and you'll find that a lot of the stocks in there do follow the oil price. What you do want to find is try and find stocks that do leverage the price of oil and do follow the price. So you want to find a stock that if oil moves 1% in a day, you want to find a stock that would move greater than 1% due to the risk factors of holding a company over a futures contract. So keep that in mind, and definitely check the links, and you'll find a lot of great trading opportunities there. Thanks very much.